Hi everybody, and welcome to our first webinar for Forex Profit Model. How's everybody doing today? What we're going to be doing, we've got a great announcement at the end of this webinar, so you're going to want to stay tuned to that. It's going to be open to just a few people, so you're going to want to stick around for that. If you guys have any questions, feel free to type them in over here on the right side of the screen here on your control panel. There's going to be a little questions box. Hey, Alan. Well, it is great to be here. Got quite a few people on board here. Can everybody hear me? Can everybody see my screen? Awesome. Good deal. Well, we will go ahead and get started here. What we're going to be talking about today are some common trading mistakes that a lot of traders make, even the older ones, the ones that have been around a while. They, for whatever reason, they can't seem to make it work, or we get new traders, and a lot of the common mistakes that people make we're going to cover today, and we're going to try and answer some of those questions and see if we can flesh out why we make those and what we can do about them, and try and come up with a solution. So we can go ahead and get started. If you guys want to follow me on my Facebook, or my blog, or my Twitter account, you guys can go to Forex. You can go to www.facebook.com/forexprofitmodel or forexprofitmodel.com/blog, or my Twitter account. And yeah, you guys can follow me there and keep up to speed on what's going on with me, what I'm looking at for trades, and how things are going. I love Twitter. Twitter is so much fun. It's a blast. Well, let's go ahead and get started here. Does anybody got any questions for me just starting off? Just want to make sure you guys are all on the same page here. Doing very well, thank you. Good deal. We'll go ahead and get started here. As I mentioned, we're going to cover some common trading mistakes, and so let's get to our first one here. We have a couple of questions I want to get to. One's a good question. How much leverage do I commonly use? I risk no more than 2% of my account on any one trade, and I won't risk any more than 6% in open trades. So that means basically I'll have up to, if I'm risking 2% on each trade, I'll have a maximum of 3 trades open at one time. And that's pretty reasonable. I can monitor 3 trades at once, and I can have 3 charts open and be watching for what's going on. So that's about my limit. I don't like to watch more than that. Maybe 4 trades if the risk is smaller. But really I try and keep it between 2 and 6% as far as my risk goes. And the webinar is being recorded, so we will get that out to you guys. We'll be posting it on Facebook and on my blog, so you'll be wanting to check that for updates. So we have our initial inability to accept a loss. When we start trading, we are sitting down and we're thinking that we're going to make $1 million in a month, or we're going to be rich by the end of the week, and so we trade in such a way to in our minds we don't want to incur a loss, because if we get a loss, that means that we're not on track. And one of the questions that we need to deal with is how should one think so that it's easier to accept a loss in a trade. And what I like to do is I will set goals for myself every day. I'll get up and I'll say, you know what, I've got between 6 a.m. Eastern and noon Eastern to trade. That's about 6 hours. So I'm looking to take 3 to 4 trades during that time. And if I have 3 or 4 winners, okay, great. I've made my money for the day. I've hit my goal. I'm going to quit. And on the flip side of that, if I hit like 3 losers, well, I've lost 6% of my account by that point, and I'm not willing to go beyond that. That's going to minimize my losses. I will always trade with a stop loss, whether I'm setting a hard stop loss or I am sitting in front of my trades and monitoring them. I know the point where I will not accept any further loss. And if I get in at a good point and the market moves up, okay, great. And then if it moves back down and goes past a swing point or something that I'm looking at on the charts, and it goes down past that point, I will get out of that trade. No questions asked. And that's going to keep me from overtrading. It's going to keep me from, I'll set those goals, I'll hit them, and if I don't hit them, okay. I'll take what the market's going to give to me. And that's one of the things that we need to, that's one of the things we need to focus on. Let me get to a question here. Yeah, this is a really good example. I've got a question here. It says Josh, glad to be here. You just struck a nerve with me. Opened up my trading account today after a month because I knew I had no stop loss and had been in a big losing trade, and I just couldn't accept it. And Wally, that's a great learning tool right there. When we place a trade and we don't set an appropriate stop loss or an appropriate target, we just turn the platform off and we forget about it and we walk away. A lot of times we're going to open that up and we're just going to want to throw up because we're in such a big loss. And that's definitely something that you want to be mindful of. You want to keep an eye on those things. You want to keep an eye on those trades and move the stop loss to break even as soon as possible. You're going to want to set an appropriate trailing stop. You're going to want to manage the trade. The best traders in the world can trade really with any system. They can take the worst system in the world and make money with it. And the way that they do it is through money management. And that's exactly how we do it. We need to manage our money, we need to manage our trades, and we need to make it such that we lock in profits as soon as possible. And we take what we can and we walk away. And then, so that's really what we want to do here. So let's get on to another one here. This is something that I just mentioned, overtrading or even revenge trading. This is a great topic here. We've got a couple of losses, so we continue to try and make up for it by making a series of bigger trades. And essentially what that is doubling up on your losses. And say you have a full lot open on a buy trade, and you have your stop loss and your take profit, and it goes against you and takes you out, but the market's going up. Okay, even though we're in a raging downtrend, the market's going up somehow, and so you double up on that instead of just accepting the loss and saying, okay, let's regroup here and see what's going on. You say, no, I know better. I know what the market's going to do, and it's going to go up, and so you instead of instead of readjusting things and reassessing where you're at, you double up and you place another buy trade for 2 lots, and then that goes against you. Okay, and it's not going to take long before you have 5 or 6 trades like that in one day, and you've just lost 60% of your account. That's something that we need to avoid, and a lot of new traders will do that. I know I did that when I first started out. I'd have a loss, and I'd say, no, you know what? I know that the market's going up. So I'm going to place a buy trade, and I'm going to make it bigger this time to recover my loss. And every time the market's in a raging downtrend, and I'm buying on the thinking I'm buying the bottom, and it just keeps going down and down and down, and I blow it. And it's just not something that is conducive to a healthy mindset, because every time you have a loss, and then you have a bigger loss, and then you have an even bigger loss, you feel like you want to make that up. You want to jump back in, and you want to recover all that, and in the process you're just losing more and more money, and so it's counterproductive. And that's kind of a martingale strategy there, where basically that theory says that you can't lose every trade. So if I double up on everything, by the time I hit that winning trade, I'll make up for all the losses, and then I will have made more money. I'll make up the losses, and I'll be in the positive. And really, that doesn't work very well when it comes to trading. It works for gambling, maybe, and that's kind of where that theory started. Was that was in gambling, where you're playing the odds. And we're not playing the odds when we're trading. We're using our heads. We're taking a look at what we see. We're being smart about it, and we're taking appropriate action rather than throwing the dice. If you have to throw the dice when you're trading, you're not trading. You're gambling. And this is trading is a business, not a trip to Vegas. And we're not throwing dice here when we get up in the morning and we want to make money. We want to use something that we can read, that we know is smart, and we want to use proper money management, and we want to move to break even as quick as possible and lock in those profits. Got a couple more questions here. I just want to get to those real quick. Now this is a good question. How to bear with the losses. There's something usual in Forex. It happens, and it is part of the business. I was thinking about this the other day, and it's a lot like driving a car. You're going to get a flat tire. You're going to have to change the oil. You're going to have to take it in for maintenance as something breaks. So you need a new headlight, or you get a flat tire, or whatever. That's the same with trading, and that's when we have a loss, it's like, okay, well, we just had a flat tire. Okay, well, let's stop and take a look at what we ran over. Did we miss something? Did we take a wrong turn somewhere, and end up biting the gravel a little bit and catching a nail on the side of the road? That's how we have to think about trading. We have to understand that this is a vehicle and we're driving it, and we're going to swerve into the other lane a few times. We're going to catch a nail every now and then. And that stuff happens. That's life. That's not something that we can avoid, but we can minimize those things. And that's our goal, to minimize our losses and maximize our profits, and make it so that we have as few losses as possible, while we let our profits hit our take profit, or our trailing stop, or whatever we can do to make money. That's what we got to do. And on the flip side of that, the big hedge fund traders, when they sit down to trade, their main priority is not to lose money. So if we sit down in the morning and we say, okay, today, what can I do not to lose money? And be smart about it. Take the best setups. This is another really good question. What do you do if you have a couple losses back to back? I will set a goal for myself. Like I said earlier, I'll set a goal for myself, and I will say, okay, I'm shooting for 3 or 4 winners today, and I will accept no more than 3 losses, because that's my 6%. Okay, and if I hit my 3 winners before I hit, if I hit 3 or 4 winners, and I haven't had any losses, okay, then I'm done for the day. If I have 3 or 4 winners, and then if I make 5 trades and one of them's a loser, but the rest of them are winners, okay, you know what? I've hit my target. I've done my duty for the day. I'm done. But if I hit 3 losses, I'm out. I'm turning the thing off, and I'm gonna take care of whatever else I got to take care of for the day, and come back tomorrow. And things that we forget is that the market has been here for a long, long time, and it will continue to be here for a long, long time. There will always be tomorrow. And we need to relax enough to allow ourselves that freedom to say, okay, you know what? I had a couple of losses. I've hit my limit of losses for the day. I'm done. Okay, I need to clear my head. I need to walk away, because when you get 2 or 3 losses in a row, it's going to mess with you. 1 loss, that's irritating. 2 losses, a little more irritating. 3 losses, that's going to start screwing with your head. And when things start messing with your head, you can't think clear. And so you're setting yourself up for a failure that next trade. And more often than not, if we're not in the right frame of mind, we're going to lose a trade. Yeah, here's another really good comment. Alan, you hit the nail on the head. 99% may win, but it's the 1% that wipes out your account. And that's absolutely right. You could have 100 winners in a row, and then that one loss that you make, it can wipe out your account if you're not managing it properly, if your head's not right. It just doesn't work. Yeah, Mike, this is a really good example. Mike's saying that it doesn't work in gambling either when you double down on your bets. He said that he was playing the odds. He doubled down 11 different times and lost everything he won. And it's not proper money management. Set goals for yourself. And when you've met those goals, then walk away. And that's the name of the game. One of the other things that we got to think about too is, how can I recover my loss if I stop trading for that day? There's always tomorrow. He lost everything he owned. More than bankrupt. Yeah, that's a scary situation, and it's a hard lesson to swallow. It really is. That's tough stuff. But you're still here, and you're still pushing on, and you still believe that there's something that you can do to make that right. And a lot of times when what it takes to make it right is learning from that mistake, and moving on and correcting the errors that we made, and fixing that and moving forward. So the next thing that we are thinking about is the Holy Grail. Now, I've got a couple of questions here. How many people think there's a Holy Grail system out there that will never lose? It's a question I definitely want an answer to.